Hey everyone, Tim Reed here, your real estate expert in the Calgary area. And today I wanted to talk about some multifamily real estate trends. What's going on here in 2026? Stay to the end because what that means for you as a real estate investor, there's some important things you should consider when looking at the Calgary and even the greater Alberta marketplace. A lot of different things and trends going on right now. Just so you can be watching out for what's happening now and what's going on into the future and what type of multifamily assets have advantages and drawbacks going into 2026, the trends we're seeing moving forward. Looking forward to getting into this. We'll see you in a minute. So the first major change that is happening in the market right now is vacancy is going up. Vacancies are trending up right now. CMHC is benchmarking Calgary market for 5% vacancy, and they could see that rising to as much as 5.9% in 2026. Now, I'm going to caveat that as being an investor myself here in Calgary. The benchmark that CMHC uses may be different than the true vacancy rate on the ground because they only have so many statistical sources that they can actually draw from to come to their conclusions. So that may not be the practical vacancy rate that you're experiencing for certain asset classes in Calgary, but that's what they benchmark at. That's what your financing is going to be based at if you're using CMHC financing, which most multifamily investors are looking for that type of financing. And if you're looking to compare and contrast that with what traditional financing could be, seller financing, what that could look like, and traditional CMHC insured financing could look like, please get a hold of us at the number below. We'd love to talk to you about that and walk you through some options. But as vacancy rate starts to go up, you start to see more competition and you have to underwrite differently when you're getting mortgages. So that's number one major trend. Vacancy rates are trending up. The market's not crashing. It's not going, to 20% vacancy or anything crazy like that. People like to say the sky is falling, and if you listen to Chicken Little, you'll never get anything done. So vacancy rates are rising. You need to underwrite a little bit differently moving forward. That's trend number one in the multifamily market here in Calgary. Number two trend to watch out from end of 2025 into next year, 2026, is that rental growth is slowing. Rents aren't collapsing. They're not going down by $500 per unit or anything like this. But what we saw over the last 24 months was such a huge run up in rents. They were going sky high so quickly. Immigration was going up like crazy. People were moving to Calgary, moving to Alberta in droves. And the two big cities in Alberta, we're seeing a lot of action, Edmonton and Calgary both. And now that's starting to trickle out in other markets because it got so expensive so quick, it's pricing people out. So what goes up must come down. That trend is starting to correct, is what I'd like to call it. That's a better way to put it rather than a crash or, a major correction in rents. But they are softening, certainly in the older product market, because they were getting crazy rents without doing any renovations. And now we have a lot of new products which are competing with those older units. But the older units have advantages, and we are going to get to those in a minute. But rental growth is slowing. The 2026 forecast for a two-bedroom in Calgary is $1,948 versus $1,914 back in 2025. As you can see, that's not a huge difference. It is a correction. It is more competitive now. Rental growth is slowing. We're going to see probably flat rents moving into 2026. That's what's projected, but well located, well appointed properties that can fit families in them are going to do well with a stability in their rents. They're not going to go down any further. Their competition won't be as fierce. So depending whether you're looking at new product, value add, or older stock, there's going to be three different sort of rental rate ranges you're going to be looking at. So it depends on the property, depends where it's located. A lot of these, new properties are in new areas, so they're not as developed. They don't have as many amenities. They don't have the big trees and big backyards. So it really depends on the asset class you're looking at and the age of the building and the community that you're in is going to look at those rental trends that there are people still getting great rents in certain areas, certain products, certain properties. Those rents have come down. Condo market, of course, huge rental competition there. They're apples to apples as an asset. So they're certainly having tons of rental competition there. And I think that's where the media is getting a lot of their attention. But with multifamily, it's been more stable. We are seeing some corrections, but certainly the growth is slowed. So that's number two force to look at in multifamily in Calgary. So number three is the supply. So of course we have to look at supply and demand here in real estate in any market, and Calgary's no different. And we've seen such a huge construction boom going on with multifamily because when there's low product inventory, CMHC and the government make programs to incentivize developers to come in to build the product that they're looking for. And the CMHC MLI Select program over the last few years played a huge role in that boom of construction. And a lot of people came in, a lot of construction starts, over 14,000 construction starts in 2025, projected in 2026, still 12,000 new multifamily construction starts. Now, multifamily, of course, being a broad category, that means multiple things. That means large apartment buildings that are 100 units. That means smaller apartment buildings that are 20 units to 30 units. And that also means really small buildings that are 8 units, 6 units. Fourplexes are being built as well. That counts as multifamily in the category of all of those starts. So when you look at those stats, there is a huge supply coming in, and there's a huge number of supply of those units that were being built that are now going to be completing into the fall 2026 and into Q1 and Q2 2027. So looking at this trend, we have an influx of inventory. We have slowing immigration a little bit. However, immigration into Canada slowed down in a huge way by federal policy, but local migration here in Canada is still happening. There's work in Alberta. Our economy is doing well. There's strong job growth here. There isn't strong job growth in a lot of other markets in Canada right now. So local in migration is still happening here. It's going to continue to happen here. We have a lower cost of living, lower cost of rents, even though they've come down a little bit versus Vancouver, versus Montreal, versus Toronto, GTA area, Ottawa as well. So people are still moving here. That's not anticipated to change, but there is a big supply coming in. So you have to look at the community you're targeting, how much new supply could be coming in around that property. What type of property are you buying? Are you buying an old property in a very established neighborhood with very little multifamily and there hasn't been much development? That property is going to perform much different than a property in an area where there's 25 new apartment buildings being built around that older property. That competition landscape is going to be much different. However, in that case, you may think having a ton of new properties around an older property, that older property is going to get killed on the competition landscape, depending on the unit sizes. It depends on how the new build unit factors compare to the old unit factors. For example, if you have a little fourplex that's a 3 bed, 1.5 bathroom, corner unit fourplex, that competes very well. Excellent compared to some of this new product because you have 2 bedroom units, 1 bedroom units. Some of these are micro suites that are a lot like bachelor suites. They don't compete well at all. The little fourplex built in 1970 is going to get better tenants. They're going to stay around longer, less turnover, and that's going to run much smoother than some of these other properties that have been built that are brand new, which are going to experience, more rental compression because there's lots of other new properties like it in some neighborhoods. And it has to support a larger construction costs and larger financing than that other smaller asset could. So it really depends on what you're competing with and where. But that oversupply condition we're going to be having is going to have an impact in certain areas for sure. So please ask us, get a hold of us at the number below. We can talk about what community trends are happening on a macro level. But this is what's going on in Calgary as a whole. There is a lot of new product coming online, something you got to watch out for in your competitive landscape. So trend number four, the opportunity is starting to shift, and I think investor sentiment is starting to change a little bit from brand new builds and MLI select construction, new product, 50-year amortization. Sentiment is starting to look a little bit different towards existing assets that have been maybe neglected for a little while. They've got deferred maintenance, and they can have a bigger upside because the rents have got room to move. That's number one. The property's got a little bit of work to be done to it, so you can add some value, get a bit of a discount. Some of these older assets with lower rents are not financeable in their current state, so this gives you an opportunity for vendor take-back financing, agreement for sale, creative financing strategies. So you can acquire those assets because you can't finance them in today's market until you do the work, do the rentals, get those rents up, and then you can bring that to the bank. And this includes 12-unit buildings, 15-unit buildings, sort of that lower to mid-market size that those assets here in Calgary, they are possibly more attractive because you could get a better IRR, better return on your investment, putting that value add in, putting that work in and that elbow grease, and also better cash flow. Ultimately, you're going to have more cash flow in those buildings than you would from a brand new building because you've got a fully financed condition on those new builds. Your cash flow is going to be nominal until some time goes by. You've, brought that mortgage balance down and then started to do refinances and things of this nature. So your older product, healthier cash flow, and a different metric where you can do more value add and get a different spread. So that's starting to shift a little bit. The market for all these new products is starting to look a little bit more competitive, a little bit more uncertain because we don't know exactly where that's going to go from the rental competition landscape and whether or not those valuations can be hit based on older rents when those buildings were designed and when they were planned 2 years ago, going back even 3 years ago, because it takes a while to get development permits, construction delays, and actually getting that building delivered. The fundamentals of the new market may not support exactly the valuations those builders were hoping for when they were in the design phase. So number four trend is people are looking at different opportunities away from some of the new build into existing product, and there are certainly opportunities to be had there. And we can connect you with off-market deals, private sales in that vertical, regardless of your size, budget, and your business model you're looking to achieve. That's trend number four, multifamily in Calgary in 2026. So number five trend to watch is the missing middle. We hear a lot about this. We hear this term a lot. What does this really mean? So the missing middle can mean basically this. It's different asset classes, different sizes. Because when you think about multifamily, some people think about huge buildings, 200 unit buildings, 250 unit buildings, mid-rise towers that are downtown Calgary, those big apartment buildings. And they're owned by large REITs. They're owned by Boardwalk here in Canada, Main Street Capital. They're large multifamily holding companies, and those big buildings tend to trade between those very small groups of very large asset holders. So it's hard to compete as a smaller investor with those assets to be able to play in that space. And the smaller assets like fourplexes is a great option. They're residential financing. There's advantages to that. They're easy to fix up. They have independent mechanical. You don't have boiler systems. You don't have $100,000 roofing repairs. They're a little bit more manageable for your smaller to medium investor and a great way to get started. And even some triplexes and even up-down duplexes with a carriage house, for example, that still counts as multifamily. There's smaller assets, and sort of that up to about 20 to 30 units is still considered mid-market. And some of these assets are starting to trade over now. Why is that? Well, Calgary doesn't have a lot of that mid-market multifamily, so it's sort of a niche that isn't as competitive because those really big asset holders, they won't buy buildings that small. It's too small for them. They need to buy large assets. They need to place large amounts of capital. And this really small investor that is looking for, say, a fourplex or maybe an 8 unit building, they're not competing at that 20, 30, and 40 unit benchmark because they don't have the capital quite available to invest in assets that large and to be able to manage something that scale and that size takes a different management style. You need to have different resources in place. You have to be able to manage a property manager or have the ability to have a leasing office if it's in that 40 unit range sometimes. So that missing middle, there's a major opportunity there, and we're seeing more and more of those larger middle-sized assets come up available as we're seeing a generational turnover. Those buildings don't sell very often because they're great assets and families hold them for a long time, or the investment companies and partnerships that own these middle class assets will keep them for a long holding period. They're not flippers. They're not looking to get in and get out and, hit and run on these deals. They're looking to hold those for long periods of time, have the asset get paid off, have that appreciation work for them. And now is a good time to look to liquidate some of those assets due to retirement, due to age, due to generational changeover. The father and the mother may have built a portfolio and the kids don't want to run it or they don't know how to run it. We're seeing this a lot more, and some of these assets are coming up for sale, and they're seeing the market being strong for those assets in Calgary because they are very rare. So they're hitting, healthy price points. They're able to cash out at a good value. They're getting aggressive cap rates for those properties, depending on condition, depending on current rents, of course. performance is always still a factor. There are cash buyers for some of these assets, but most buyers are still going to get some financing, or at least they're going to plan on getting some financing, even if they are paying cash up front, and they have to plan that into their underwriting. So there's major opportunities in that middle market multifamily here in Calgary, and we're seeing more opportunities come up because of the timing of things. So that's definitely an opportunity to watch. That's something that you can look at closely. And that's trend number 5 here in Calgary for multifamily in 2026. Thanks everyone for watching. If you found this useful or you found this insightful or you want more information about multifamily or other commercial assets here in Calgary, we'd love to chat with you. Please hit the like button, subscribe to the channel. We like to put out as much content as we can, and we'd like to hear from you if there's things that you want to know more about here in the Calgary market or in the Southern Alberta region. We want to cater this channel to give you the answers that you're looking for. My name's Tim Reed, your real estate expert in the Calgary area. Look forward to seeing you in the next video.